Hello, everyone. This is the fourth webinar that we are hosting at Ethereum Greece, where we invite researchers, engineers, and people that are actively working and building on Web3. Today with us, we have Saurabh Dhekale, which is working as a business development contributor at GMX, a leading perpetual exchange, a leading decentralized perpetual exchange. I'm very happy about today's webinar because GMX, to be honest, is one of my favorite projects. It has processed more than $360 billion in trading volume. There are more than 700,000 people that are actively trading in their platform. Saurabh, the stage is yours.
Hey, thanks for the intro. I'll quickly share my screen. Yeah. Is my screen visible?
Yes, go ahead.
Hey, everyone. First of all, thanks for the E3's community for giving us opportunity to speak and represent GMX here. So a bit about me. My name is Saurabh. I work for GMX as a BD contributor. And in today's session, we'll be learning about how decentralized exchanges work, what are the uses, why you should use a decentralized exchange, and what are the differences between centralized exchange and a decentralized exchange in the most simplest manner. So let's kick off the session. First of all, what is a crypto exchange? Basically, crypto exchange is a platform where you can buy, sell, or trade cryptocurrencies. It is very similar to a stock exchange, but this is for digital assets. And right now we also have, as you can see, RW is being listed. Like you can trade NVIDIA, Apple, or Google, any assets 24/7 on chain. So on an exchange. So that's the advantage of an exchange. So there are two main types of exchanges. One is a centralized exchange, which is DEX, and other is a decentralized exchange, which is DEX. So we'll deep down into this more going forward. So let's understand the difference between a centralized exchange versus a decentralized exchange. So centralized exchanges are usually owned by companies. Basically, you can deposit funds into their platforms. Examples could include Binance, Coinbase. So as a trader, I could go there, trade. I need to do KYC. I need to submit every detail possible. Now with the MiCA laws kicking in, people are moving more towards DEXs instead of centralized exchanges. So I need to provide all the data. The funds are secured by a centralized by the entity, so you have to trust the centralized exchange. It's just like a bank. Like, okay, what if the funds go? Previously saw with FTX, when the funds got when the user funds were used for certain other activities. What is a DEX? So the beauty about crypto is its decentralized nature, its permissionless nature. Anyone can use it at any time. So basically, a DEX it has no central authority. I can create a pool on Uniswap, NLP pool. People can deposit money in that. You keep control of your funds. You don't need to do any KYC. You don't need to show how the funds came here in your wallet or something like that. The trades happen directly on blockchain. It is transparent. Anyone can see if you've taken a long on BTC, if you've taken a short on BTC, or if you have traded from BTC to USD. So everything is very transparent and visible to the community. So let's move to the next part. Why do DEXs matter? So there's no middleman. You don't need to pay fees to a centralized exchange. Like whatever fees it goes on the network, probably to the exchange, and it's very minimal. And yeah, there's more control of your assets. You are sole owner of the custody or owner of the assets. The transactions are transparent. Whatever happens on chain, you get to know. So you're more less like scam. It's permissionless. Anyone can use. If I want to send money to my nephew in America sitting here in Europe, I can do that. No KYC. I don't need to like show my driving license, show my passport while identifying myself. I can use it anytime I want. So first of all, like we need to know some key concepts before we move forward. You need to understand what is a wallet. Probably after the presentation, I will show you how these things work. But right now, I'll explain you in a theoretical way. A wallet is basically a MetaMask where you store your funds and you can use that to trade or send money or do stuff on the blockchain. So there are multiple blockchains like Ethereum, Arbitrum, Solana. Ethereum is like an L1. It's like a transaction layer, and there's an L2 called Arbitrum, which sits down below Ethereum. And once the transactions are done, they are submitted towards Ethereum. We need to understand smart contracts. Basically, smart contracts are like contracts which help you interact with the protocol. So let's say if I want to deposit money in GMX, I need to interact with the smart contract, and I need to allow the smart contract to deposit my money, give it the acceptance to like deposit money in GMX. So there are multiple tokens as well, ETH, USDC, GMX, which you can use to trade long, short, or sell, basically. Or you can LP as well. Let's say if you want to earn interest on the money that you have. So yeah. Now let's understand what is GMX. GMX is a decentralized exchange. It is completely transparent on the blockchain. Anyone can use it anytime. More specifically, we have focused on perpetual trading, specifically derivatives. In simple terms, assuming I think Bitcoin goes up, so I would long on GMX, and assume if I think like GMX, okay, BTC goes down, the market's a bear market, there's a war happening or there's uncertainty, so I would possibly go on GMX and short it and earn money. So what does GMX do? GMX runs on public transparent blockchains like Arbitrum, Megalith, and Avalanche. It allows users to trade with leverage. As the author mentioned, the host mentioned that we have around more than 70,000 active users, and with over more than 360 billion in trading volume. You don't need to do any KYC. Anyone can use it and trade permissionlessly. All sort of crypto assets. You can trade oil as well. You can trade gold, silver, and a bunch of other RWAs permissionlessly. So, yeah. What makes GMX unique? So it doesn't have any order book like structure. So it typically revolves around pools, which is liquidity pools, which we'll deep down again in this topic. So users basically who want money on their idle money that they have, they deposit money in the pools called GLV and GM pools. So as a and I get yield on that money, whatever the principal yield, principal token that I deposit, and I get yield on that pool. It has low fees compared to many platforms. So we have probably the lowest fees on assets like gold, silver, oil. Traders don't trade against each other, so they are not competing like with a market maker, or there's someone who, on a centralized exchange, there's always a market maker who's taking a trade. They trade against the pool. So if a trader makes money, the pool loses money. But if the trader loses money, the pool makes money. So that's a risk or upside for an LP and a trader. So whatever open and close fees that the traders generate goes towards the LP pool. And yeah, that's how it works. So let's understand how trading works on GMX. So the first step that I need to do is I need to connect my wallet, which is ideally a MetaMask, Rabbit, or a Phantom. So these are different types of wallet you can use based on your experience and how you want it. I could deposit collateral. Collateral is the money that I deposit. It could be either ETH, USD, GMX. So GMX supports multiple assets which I can trade on. And assuming again, let's assume I think that the price of Bitcoin goes up. So I can open a leverage. So what is a leverage position? We'll probably cover that in the next slide. But to be precise, like I think Bitcoin goes up and I want to make more money. I can open a higher leverage trade. So if $100 trade is opened at 5x leverage, it's around $500. So if that is successful, I make around $500 if the price goes up. Let's say if I think BTC goes down, so I can short it on GMX with the leverage that I want. If I want to play it safe, I can also use 1x leverage and then usually execute the trade. So it's basically depending on your risk appetite and whatever the market conditions is, and you as a trader do. As I said, let's understand what leverage is. So leverage is basically borrowing funds to increase the trade size. I think there's an opportunity on like BTC again, that hey, BTC would go higher. So I use a 5x leverage and the trade volume becomes around $500. And if the price goes up, I get, as the price keeps going up, I'll get more money. But let's say if the price goes down, I could lose money as well. So there is higher potential of profit, but also higher potential of risk. We'll also understand about take profit and stop loss once while I demo the live app. And yeah, what are the risks of using GMX? There are certain risks. One is liquidation risk. I think I might go long on BTC, but the market conditions are very different and it goes short. So my position would be liquidated. So if I open a position of $100, so I might lose the $100. The market volatility, there's uncertain conditions. There's another war or something happens. There's the Fed comes up tomorrow and says that there's no rate cut. So possibly the markets could go down. Tomorrow the Fed says the market rates, we have a rate cut, the market could go up. So assuming that risk in place, there could be market volatility and you need to be prepared for that. There could be also smart contract risks. So far there have not been any smart contract risks, but yeah, you also need require understanding of how leverage works or how a certain asset works, how is there more volume to be traded on. So there's more bunch of technical other stuff which we'll deep down as well. Let's understand what is GLB and GM. So GLB assets are like, it contains of 50% as a long token and 50% as a short token. We have two GLBs right now. One is a BTC GLB and the other is an ETH GLB. So let's assume I am as a trader take a long on BTC. So it's managed 50% long side, 50% short side. I generate fees, whatever trading fees is generated goes towards the pool, and I, like the LP, the person who has provided liquidity on that pool earns money. It's made of multiple assets, which are called GM pools. So BTC pool is made of those BTC, Hype USD, GMX USD, and a bunch of other assets. I, as a user, or you as a user, can earn money by providing liquidity in these pools. GLV pools traditionally have on the BTC side given somewhere around 7 to 10% in yield, and on ETH it's around 7 to 12% again. So yeah, how do users earn money on GMX? One is by trading fees. Like I could trade on GMX and I could earn money by profits. The other is by providing liquidity to pools like GLV and GM pools. I could also stake my GMX tokens and earn yield around that. So that's around 27%. What are the advantages of using GMX? Self-custody, you control your own funds. It's a very transparent system. Everything is publicly visible on a blockchain. You can see how your funds have been used, or like if you're opening a loan, if you make profits, how much money you earn. If you're liquidated, why are you liquidated if the price goes down? We use Chainlink oracles, which give out like real-time price feeds, uh, very lower or minimal fees compared to competitors, cross markets. You could also use trading as a passive income opportunities. Let's say you need a side income to earn money. Trading could be go to way to earn money on passively on your main job, your main thing. Who should use GMX? One question. Traders who are comfortable with crypto basics, who understand how crypto market works, how leverage works, or assuming they know what they're getting into risks. They might also lose money. Users wanting more control, who want to own the funds that they have. They don't want to do any KYC. People interested in decentralized finance, who believe in banks should be eliminated completely. This might be very controversial, but yeah, and very transparent, and believe like have the custody of their own funds. Very simple analogy. Centralized exchanges are like banks. Decentralized exchanges, you are your own bank. You control the funds. You decide how you want to deposit, how much money you want to earn on what pool based on your risk appetite. And GMX is a decentralized trading desk where people can go out, trade, provide money, provide liquidity on the pools, and earn money. So yeah, that is pretty much it. So what are some key takeaways that you can take from this presentation? That DEXs give you control over your fund. You don't need to like rely on anyone. If anything tomorrow, anything happens to any centralized exchange, you control your own. GMX is powerful, but an advanced trading platform. You can trade RWAs as well. So it's leverage trading is high reward, and it also comes with really high risk. So only trade with the money you're comfortable losing, or yeah, that's pretty much it. So clear. If all good here, I would possibly go into the next steps and show you a demo of how GMX works and how you as a user can trade on GMX. So I'll go here now. So just with this. Oh, sorry. So this is how the interface looks like. And now we'll deep dive into the basics. So this is a wallet. It's called MetaMask. This is where I store funds, or where a user stores funds usually. Since now we're trading on a DEX, we need to connect our wallet over here. These are the assets that GMX supports. Arbitrum, Ethereum, Base, BNB, Magnite, Avalanche, Botanix, Solana. So since we're going to connect our Arbitrum wallets, so we'll choose Arbitrum as a network. Since I have money on Arbitrum as well, I'll choose Arbitrum network. I'll connect my wallet. So this is what pops up. So there are multiple wallets which you can use. So currently I'm using MetaMask since I have MetaMask. So I use MetaMask. But you as a user could use other wallets as well, like Rabby, Gemini, Wallet Connect, or Trust Wallet, or any other. So I connect MetaMask. After connecting with MetaMask, as we said, like you need a smart contract to allow to connect your wallet with it, with the DEX. So we give the access to the wallet to that, hey, you can interact with the smart contract, and we click on connect. Now that the wallet is connected, as you can see, it shows up my wallet name. We also have like ENS name, so you could have your domain names over there. So probably let's assume my name is Max, so it could be max.eth, and it could show up max.eth. So let's understand what leverage trading is, and yeah. So let's understand with BTC pools. So these are the markets that GMX supports. We have RWAs like gold, silver. We have DeFi assets. We have memes as well, like Doge, SHIB, BOOM. Layer ones like Pole, Algo, Canton. Layer twos like Linea, Optimism, Arbitrum. So we'll go for, right now we'll go for BTC, since that is what we are assuming. So whatever I suggest over here is not financial advice. The trades that I'm doing is just for like making you understand how trading works on GMX. So I think I'm a very bullish person in general. So I think Bitcoin will go up. So I will open a Bitcoin long right now on the current market. So as you can see, I can use available to pay. I can use multiple assets that I want, possibly ETH, UST, USDC, Eigen, Wrapped ETH, BTC Link, or a bunch of other assets to open a long. So I would use, like, size would be 1 GMX. It's around 20 USDC. And this is the leverage indicator. I think, let's say Bitcoin is going to go really, really up. So I can go as long as 100x leverage. But there's also the liquidation risk as well. Assuming the Bitcoin price goes to 50,000, I would lose the amount that I have deposit. And as you can see, like this, the amount also increases. But since I'm going down, so probably. And we're going with a 2x leverage. Yeah. So like a 1.2x leverage. And I think so this is very important. It's called taking profit. So let's assume right now Bitcoin is at $76,240. And I think the Bitcoin would go around $77,000. So I could add a take profit price in probably USD terms. So 78,000. And now let's understand what is a stop loss price. So stop loss price is assuming I don't know, I'm not unsure, I'm very unsure about the market. And I don't want to lose my entire capital. So I could add a stop loss. So even if the market goes down, and assuming the position that I have, like the stop, like $76,200. So I add a stop loss over here. And this is just to avoid risk, and I don't lose my entire capital. So whatever the amount that I've added, I don't lose the entire capital. So yeah, and I'm going to take the trade right now. As again, I said, this is not financial advice. This is just for testing purposes and just for the presentation. So I take a market long with me. Since this is on an exchange, as you can see, this is a network which I'm using, Arbitrum, very transparent. This is a request from app GMX interacting with the router. This is the network fees that I need to pay for interacting on the blockchain, and it's like very minimal, 0.16, and I confirm it. And yeah, so I have taken a trade, and the trade is being opened. And as you can see, you can possibly see it over here. Right now, I'm in loss of 0.01, but that's how it simply works. Same goes for like the short trade. Like I want to trade on share BTC and open on like to short it. So I could add it again over here. So yeah, that is pretty much it. Now let's understand on how I can earn money on GMX. So there's this earn page where it shows opportunities there where I can deposit money and I can earn money. So right now I have deposited in GMX like as a staking token and the amount of money. So I've earned around $17 in probably in the span of 30 days. The amount of money I've invested, the amount of money I've there are multiple pools over here like GMX, BTC, RD, Triple B, top performing pools where you can make money. So we can go on pools right now to understand. So as I said, there are two pools. One is the GLB pool and the other is the GM pools. So we go to GLB pools right now. Happy to take questions after the presentation. So this is the GLB pool and the 30-day performance is around 12.33%. Let's see what the 90 days. It's around 1.53% because of the market volatility. So I could deposit money here in ETH in a single asset, or I could also deposit money in two pairs, like possibly 50% in ETH and 50% in USDC. So what I get is a GLB asset, which would be like GLB USDC. And if I want to sell, I can also sell my GLB. So then I earn money in ETH and USDC. So this is the composition, the liquidity pools in the GLB asset. It's SUI, ETH, Curve, Dolomite, Aerodrome, Monad, Triple V. This is the composition of the tokens. Long is the WE token, and the short is the USDC token. So yeah, let's understand the GM pool now. So we'll go with the BTC pool. So the BTC pool, 30-day performance has been around -3%. So the LPs over here are not making money. Say 90%. The 90-day performance has been 7.5%. So if you have deposited money around 90 days, you would have made around 7% in yield. But as again I said, like there are risks of like possibly like losing the money as well. So to be careful. So this pool is a GM pool, and this has an exposure of BTC and USD. So I can buy this GM pool in assets as well with USDC or with BTC or with wrapped BTC as well. And what I get is GM BTC and GM USD. So 50% is BTC for the longer token, 50% is USD for the shorter token. So as a trader opens a trade on the long side, the money goes to this pool. Like the trade that you've seen here goes to this pool, the BTC pool here. Okay. I could also deposit money in pair, possibly 50% USDC and 50% in BTC. And what I get is called a received token, which is GM, BTC, and USDC. If I want, I could also sell whenever I want. So yeah, that is pretty much it. Also make money by referring people to the platform. So people could, I could create my own code, and I could create it, and people could trade on the platform, and they could earn 5% discount, and you could earn a percentage of the fees that they generate towards yourself. And yeah, that's pretty much it. And this is our ecosystem. We have close to 70 plus integrations integrated. Like if I have to go to assets like DBank, Strike, Yieldyak, Jonestar, OpenOcean, Beefy Finance, Dolomite, Rabbit Hole, and Morpho. Any questions? Happy to answer them. Yeah.
Okay, first of all, thank you for the great presentation and the explanation of how GMX works. Guys, do you have any question? Because I jump in with mine. Okay, I will start then. So I'm particularly interested in the scope of the researcher, in how you are taking the price feeds. Are you using a decentralized Oracle network? Are you taking from some centralized feed? How does this work? And what are the precautions that protect your traders when it comes to the price feeds?
Thanks for the question. I really appreciate it. So what we use is we use Chainlink oracles. Chainlink is a decentralized oracle provider. Since we are a perptex and we want faster price details for traders, and traders would want a faster execution for their trades as well. So we use something called Chainlink data feeds. So the prices, how it works is, so the data feeds, how they get the prices is, it takes from the blockchain. Whatever the price of the asset is on the last block, when the block is submitted on chain, it takes price from that and it's submitted on chain. So assuming I can share my screen again.
Yes, go ahead.
Yeah. So let's see the screen. So right now the price of its last second has been set. As you can see, it changes every second. So on the chain, the price of the blockchain is $76,200. So yeah, this is like last transaction or the last block submitted on chain. This is the price of the token.
This gives me the next question. So in Arbitrum, the block is like 300 milliseconds, while on Ethereum, if I'm right, it's about 12 seconds. Do you have the same approach regardless the block mining's like timing?
Yeah. So on Ethereum, so I'll tell you, on Ethereum BNB base, it's not a native deployment. What I do is I, as a user, can deposit money from Ethereum, but the trade is going to be settled on Arbitrum. So, and also like for me as a user, it's very seamless. I don't need to sign transactions every time, since I've already deposited money inside the exchange from Ethereum network. The money is already like, so we use layer 0 for our trading experiences and to bridge money. So yeah.
Okay, thank you very much. First of all, I really like the user experience in all of it, and you have made it in such a way that we kind of forget that it's a Web3 application. So it is pretty lovable. So for the people from National Technical University of Athens that they are seeing us, I encourage you to use the Ethereum that we have given you to interact with GMX, and I will also dedicate the session in more engineering on GMX that I will do it in person on the university. Do we have any other question, guys? Feel free. I know that the topic might seem a little difficult, but with the webinars and workshops we're doing, I hope that you are building an understanding of all these concepts. Okay.
I have a question for Saurabh.
Go ahead.
I think might be interesting for folks to know, because you touched on the product a lot, and it's a decentralized exchange. Obviously, there's like something that resembles a core team that develops things. But Saurabh, would you mind, at least on a high level, not the inner workings of how things can be like upgraded or new markets added or incentivized assets and all that, and GMX DAO basically is what I want to hint at.
Okay, yeah. So to answer your question of new assets added, so we have a listing committee. Just a minute. I'll just take you to the DAO page. So to what Sync is mentioned about decentralization, governance is a really big part about decentralization. Most of the decisions are being taken by the community. So to list new assets on GMX, so the assets that you see right now, EPTC, are the RW assets, or this is mega ETH, so it's one Arbitrum. Yep. So the assets that you see on Arbitrum, this is listed by a committee of 3 members. This committee members are being elected by the DAO on the governance forum, which is called the GMX listing committee. It's a 3-member committee, which specifically focuses on listing new assets. So the process is very transparent again, and like as I said, like it's very decentralized. Like anyone can participate in the committee. We have elections every 6 months for the committee members, and yeah, that's how they choose assets. What was your other question, Sinkus?
I was looking for the top story. Generally, like about the GMX DAO, you know, like
Yeah.
basically, I want to get folks to hear that there's like the governance and how decisions are made, to understand like what it means for DEX to be decentralized.
Okay. So very important thing for like a DEX or any DEX is to have a DAO. So what is a DAO is basically it's a decentralized authority owned possibly by like people, delegates. Community members can delegate their tokens to these people, and they can vote on proposals. And everything happens on chain. So everything is visible, how you're doing transfer of the funds, how you are spending the funds, how you're utilizing. So I can give you one example. So these are the delegates of the community, and this is a platform called Tally. So this is Q. He's one of the biggest token holders of GMX. This is a leading core developer. Again, few committee members here. So these guys decide on proposals where they interact on the forum on what should be the next steps for the protocol. Of course, the core contributors do participate, but these guys also give out like their thoughts, and me as a I can just hold the token and share my thoughts to the protocol, making it decentralized. Apart from that, these guys, let's say, assume like we want to have incentive proposal to be used for marketing or trading activities. So anyone can submit, anyone with 30K votes can submit a proposal on chain. So this is posted by a community member. So you just need 30K votes to publish. The proposal mentions that you use 2 million of stable coins from the treasury, use that to buy GMX tokens. What this does is to increase the buying pressure on the token. So help increases the token price, and use that to distribute to traders, to the community as part of incentives. So if you trade on GMX, you get incentives. Very community-driven decision, very transparently done, and everything is done like who sits on the same. Once the transaction is done, it stays live for a day on chain, so anyone can review it. We also have a security committee, which I'll deep down into. After that, we have a 5-day voting period where these delegates come and cast their votes if they are in favor of the proposal or if they are against it. If they seem like, okay, we don't want to support it, neither do we want to reject it, so they abstain on it. Once that is done, the proposal is sent on queue on the time lock, and post that the proposal is executed. As you can see, like where the money is sent. This is a multi-sig controlled by the GMX governance committee, few core contributors, and some of the GMX community members, and the value is around 2 million. So GMX is also secured by a committee of 5 members, which is the GMX security committee, who control the protocol multi-sig, which has a 24-hour time lock. So which again gives the decentralized. So whatever happens on the protocol could be controlled by the multi-sig. So yeah, that is.
Okay, I really like this explanation. For our audience, on the Monday on National Technical University, we will dive much more into DAOs and we'll explain some of the things Saurabh mentioned here. I also have another question, like, so you are a leading decentralized perpetual exchange. Like, what are perpetual exchanges are trying to build right now? Are they focusing on creating a better user experience, faster transactions? Like, what is that motivates perpetual exchange to build, and in what direction? If you can share some insight.
So right now, most of the world is believing in tokenization as the next thing. So every pub dex wants like to list RWAs, assets like gold, silver, oil, which are volatile, and people also want to trade. Uh, where can I own an oil long on a Sunday evening without like doing KYC? That is possible on GMX, and you don't need for the stock exchange to open, assuming you want to trade 24/7, possibly you can trade on perps. So people are focusing on listing RWAs since that has more volumes. Yesterday we had the US companies announce their earnings, so people would want to trade these assets 24/7 even before the stock market opens, and possibly like if they're bullish on a certain company like Meta, open along on exchanges like GMX. And again, like there is a demand like people to like, of course, improve the UX. But what they're looking for right now is to get more distribution. So a lot of these pub dexes are partnering up with exchanges like eToro. There's a very big exchange called Robinhood, which is coming on Arbitrum, which is launching their own chain. So even they want a piece of this. They want users to trade like tokenize these assets, and they're starting with the Europe markets. So me sitting in Europe can open up like a leverage long on Robinhood chain transparently, and yeah. So that's what the focus is on right now. Listing more
Okay.
RWAs, getting more incentives, and yeah.
One last question, I promise, because I really like this topic. You talked a little bit about tokenized assets like silver. Do you believe that when it comes to perpetual exchange of silver, for example, can we still use the same decentralized Oracle network, or do we need to adapt a little bit? Is it like the same infrastructure? Like, yeah.
So what GMX does is again, Chainlink uses multiple sources of price feeds for that. So Chainlink also uses like Binance feeds. They also have created their own feeds, which they do. So there are multiple, since we're trading RWAs and we want them to be open 24/7, which they are not. So at times there could be opportunity like someone could come up with a real big size, let's say like $1 million, and open along and could disturb the market and could increase the price of the token. So to avoid that, at certain hours you can only trade with certain leverage. But again, it gives you like a 24/7 by feel. So yeah.
I see. Thank you. You helped me understand a little better the problems when it comes with this aspect. So, guys, do we have any question? Anyone else? Okay, so let's start closing the session. First of all, Aris. Okay, bye, Aris. First of all, to everyone that is here and cannot and want to follow our next webinars, you can join our Discord of Ethereum Greece or following it on our socials. I will copy paste it here if I manage to. Yes, or follow us on Instagram or LinkedIn. I want again to thank Saurabh for the great presentation and the question response. It was great. I learned a lot of stuff, and I hope all of you did. For the NTUA people, I see you on Monday in our lecture. For the rest of the community, we are planning the next webinar to be on 20th of May. Stay tuned. Thank you.
Thank you so much, Gian and Sinkis, for the opportunity. Really appreciate it. And hey, everyone, really nice to meet you. So thanks, guys. Bye.
Bye.
Thank you, Saurabh, and thanks everyone.